Hello and welcome to the Global View. We kick it off here on AusBiz with a look overseas to see what direction our market is likely to take and to uncover any opportunities outside of the ASX. Great to be here with you. Okay, we are expecting to see the heat come out of this local market, but not because of what happened on Wall Street for a change. In fact, stocks put on in a good session, rising on tech, and perhaps taking heart from a de-escalation in Iran. Now, TSMC shares smashed its results, posting a 35% jump in fourth quarter profit that sent US listed shares to a record high mid-session, and that in turn pushed ASML and, in fact, European stocks back to near record highs. The banks joined the reporting season party as well overnight. Goldman Sachs and Morgan Stanley shares both rose significantly. Goldman Sachs' revenue beat on record stock trading. Morgan Stanley beat the street off the back of a deal-making flurry. BlackRock also beat analysts' forecasts. Its assets hit a record $14 trillion on the fourth quarter market rally. Healthcare stocks rose after the U.S. president said the White House will lower drug and insurance premiums and hold insurance companies accountable. And for you music lovers, Spotify shares rose initially after it hiked prices in the US, Estonia, and Latvia before dropping later in the session. US weekly jobless claims fell unexpectedly, with claims dropping to 198,000. Economists are still calling it a low hire, low fire jobs market there. Chicago Fed President Goolsbee joined the chorus this week. He said that the Fed should focus on getting inflation down as the job market remains stable, saying rates can still go down a fair amount. To the UK, and UK GDP rose 0.3% in November, the strongest month for growth since June. Now the bump is being put down to a return to full production at car maker JLR, but services did well as well. And in Europe, the German economy expanded for the first time in 2 years. Consumer and government spending helped push GDP growth to 0.2% for the final quarter of 2025 and the year as a whole. The U.S. benchmark 10-year yield sitting at 4.169%, and the U.S. dollar rose. The Aussie is trading at 67 US this morning. Oil prices took a beating overnight. Brent settled down around 4%, ending a 5-day streak. U.S. President Donald Trump said the crackdown on protesters in Iran is easing, so calming concerns about supply. Now, those comments on Iran also weighed on gold. Also, those better than expected U.S. weekly jobless claims, which boosted the USD. And just a note, Bitcoin is eyeing 100,000 US once again. So with U.S. earnings in full swing, with the likes of TSMC as mentioned, my next guest has his eye on U.S. markets. Greg Boland from moomoo joins us now. Greg, nice to see you there. Just give us your assessment of that session overnight.
Good morning and happy Friday to you, Nadine. So in terms of the US session, the market itself closed up about 0.26% at 69.44, reaching a high of 69.86 earlier in the week. In the S&P 500, there was 510 of the 500 stocks gained, 191 fell. The Nasdaq itself was up 0.2, and the Dow Jones was up 0.5, 15 stocks gained, 15 stocks fell, and year to date that index is up 2.9. So in terms of the major three indices, the other two are up about 1.8, and the Dow's up about 2.9. Interesting though, the Russell 2000, the small cap index, is up, was up 0.9 today, so it beat the others, and year to date that one's up 7.8%. Often this occurs in January, where there's a shift into the small stock index, and the Russell 2000 made up of 2,000 of these small cap stocks. And so the focus there is really there's a lot of tax selling just before the end of the calendar year, and then in January the idea of a January effect is that the markets rally because the small cap stocks go higher. So that's an interesting development. So this is a positive day after yesterday's day. The VIX got smashed back down under 16, anywhere over 19 becomes bearish, so the bulls are back in charge again in today's market. And one of the most interesting developments was the result from Taiwan Semiconductor. So that the index that measures semiconductors, the SOX, the Philadelphia Semiconductor Index, was up 1.5% and is up 10.7% year to date.
Yeah, that semiconductor index is looking very good. And TSMC, I mean, that just smashed it out of the ballpark. And you could see the ripple effects that it had. We've also had news this morning that Taiwan and the US have come to an agreement over trade. So do you reckon that, boy, this narrative still has a ways to go?
that whole AI, it's comparing to the dot-com bubble and bust of sort of 1999, 2000. For those of us old enough to remember those times, this sort of narrative was definitely in the market last October, November. And so today was really a AI is dead, long live AI moment, in that Taiwan Semiconductor advanced and at 4.5%. But the most compounding thing was really their revenue guidance was up 30% for the year 2026, and they plan to spend $56 billion this year, which is 12% higher year to date. The other thing really was the strong endorsement of the whole AI sector and demand by their CEO, and he definitely dismissed an AI bubble, particularly in those fears, stating that they'd done surveys with their customers and demand is still going to continue to increase. And they now see a compound annual growth rate, annual rate in the high 50% through to 2029. So a long period ahead for the sector. So it comes really this whole overspending in the sector and the whole, the king is now risen again. Let's go. It boosted NVIDIA, was up 2.1%. ASML, which is one of these semiconductor tech companies that sort of support the whole semiconductor business, was up 5%. AMD 2%. And the largest customers of Taiwan Semiconductor include Apple, NVIDIA, Qualcomm, AMD, Broadcom, and Amazon. So that whole sector has definitely risen as a result of this result today.
Yeah, okay, so quite the session. Now, often here in Australia, we lament the fact that we don't have, those semiconductor companies to a large extent on the market. I mean, there's some very small companies listed, but Greg, do you watch some of those, I suppose, AI-related stocks that are listed here in Australia?
I watch them, but I don't really follow them very closely. But in terms of the ones to think about in the infrastructure space, you've got NextDC and Megaport in that realm, and then in the core tech area, you've got Weebit Nano, BrainChip, and Archer Materials, and those are the ones that in the ASX would be interesting to look at.
All right, so those are a couple local stocks to watch for that thematic. Now, I would like to just touch upon the US banks because they usually kick off that quarterly reporting season. And in terms of what came before, so Citigroup, Bank of America, they were all sold off on their results, but there was a real sort of change in sentiment toward that coming from Goldman Sachs and Morgan Stanley overnight.
Yeah, it's definitely, they're not really classed as banks, they're more in the capital markets area, I suppose. And so, but obviously in their whole financial sector. So Morgan Stanley and Goldman's and also BlackRock, up 5.7% for Morgan Stanley, 4.6% for Goldman's, and over 6% for BlackRock. Definitely changed the sentiment in that whole bank financial sector today, and the financial sector rallied as a result.
Okay, so we are watching, of course, with much interest what will come next week from earnings season. What is on your radar, Greg?
Well, it's another very interesting week. We've got some of the, the big Dow Jones component stocks like 3M, company my father worked for 34 years, as an aside. That reports on Tuesday, as does Netflix. And it's interesting with Netflix, you've obviously got the Warner Brothers Discovery bid that they've put in, and also a competing hostile bid from Paramount Sundance as well. So that whole thing will be interesting. Interestingly, with Netflix, after a result, if it's had a positive result, then on average, so the mean return is around 11% on the upside, and if they have a negative result, the mean is around 6.7 on the downside. So long-term average is around just under 1% movement, but Netflix definitely swings around a lot around results. Also on Tuesday, you've got United Airlines and Rio Tinto, and then on Wednesday, you've got Johnson & Johnson and Halliburton. Thursday, Intel, which is up around 37% year to date. It's been one of the stocks that obviously Trump has been backing, and that's gone sort of from $27 to $20 to $37 in the last period. And you've also got Alcoa reporting next Thursday.
Oh, so it's going to be a big week. Can we just get back to the here and now, just briefly, Greg? Because we saw gold and silver retreating from record highs, we saw oil really taking a hit through the overnight. So I suppose that's why we're expecting to see the ASX dip a bit at the open. It's just that, commodity tailwind that we've had really going in our favor, maybe waning a bit.
Yes, I think if you look at the record highs of gold and silver, it's obviously something that has to come back at some stage. And if there's better geopolitical news, particularly in Iran, then the hedge against these sort of events, which is gold and silver, is definitely would be sold off a little bit because they're not so as relevant. But then also with the Iran situation, oil's been sold off because there shouldn't be any more problems with supply. So those commodity areas definitely down, and we do expect those stocks affected today. But then on the other side, you've obviously had these very good results from some of these financial capital markets companies, and that should help the financial sector in Australia today.
Well, it's been a pleasure to have you join us to get us across what we need to know to get things started here on this Friday. I hope you have a great weekend, Greg. Thanks for joining us.
Thank you very much, Nadine, and you too. All the best.
Thank you. Okay, let's check the SPY futures to see what we're expecting in just a couple minutes time when this market gets up and running for this Friday session. The S&P ASX 200 expected to dip a bit by about 12 points, 1/10%, 8,822. Look, of course we want to see a positive session, or we would like to. I shouldn't say wanna, should I? But we've had a good week to date. I'm just letting my page refresh. It looks as if we are up by about 1.7%. So we'll be keeping a very close eye on US futures as well through today's session to get an indication of where we might finish. I'll take you through the first hour of the open next.